Do you remember way back in the past, like last week, when everybody's saying we're going to be in a recession, nobody's going to buy houses and housing prices are going to crash? And then today, CNBC comes up with this headline: home mortgage demand for home buyers continues to recover even with higher interest rates. What are they talking about? So in today's video, we're going to talk about where mortgage demand is and where hopefully mortgage rates are going. So right now, what we're seeing in the markets right now, yesterday, the mortgage market was flat as a pancake, and it's kind of eerie. It's like mortgage rates just aren't moving. But some good news we have in the market right now is right here. Just like that, Wall Street analysts are saying recession's over. Now we have somewhat of an agreement with China, not really hashed out just yet, but as long as we know there's talks there, a lot of people are saying, well, the recession's over and now the economy's going to do pretty well. Now, it's funny how it changes on a dime. But let's get over to the headlines that we're seeing right through here just to see what these headlines are telling us. Is it telling us the economy is starting to crack? And we're going to go over to the economic news we have for today as well. But let's just go down through here and see. Tesla continues surge as reports say new Musk pay deal is in the works. Stock rally no one is comfortable with. Makes it hard to chase. Let's get over to the here. Fed Jefferson sees lower growth, says inflation could rise. Could rise. We're going to check and see if Jefferson is a hawk or a dove. You guys know what I mean out there. Then let's go over to here. MP Materials, Medan, to jointly develop rare earth supply chain in Saudi Arabia. Septerna stock skyrockets. It's just Tower Semiconductors forecast quarterly revenue above estimates. So when you look at a lot of this stuff, then this is what I look at. I really don't watch mainstream media much. I do watch this, and then I do my fact checking. If you look at this, earnings that we've been watching are pretty darn good. Forecasts are pretty darn good. And then when you look at the inflation front, well, let's look at the stuff that the Federal Reserve monitors. Here's what the Federal Reserve monitors. I do want to explain to you guys why mortgage rates aren't going to hit 4 or 5% anytime soon. And the reason why is it's right through here. Okay, I'll explain this in a second. But here across the board, here's what the Federal Reserve monitors. They've monitored the PCE. That's the inflation number that they monitor. What do I monitor? Well, I monitor this right here. I look at consumer inflation and producer inflation. Just this week, we had consumer inflation come in, and it actually came in less than expected. Okay, so now tomorrow what we're going to get is producer inflation. So that's going to tie in saying, what's the producer prices going to do? And then they're going to eventually flow to the consumer. So this is going to be a big number this time because tariffs are starting to work their way into these numbers. So we'll pay attention to how the PPI numbers coming in tomorrow. But here's what the Federal Reserve looks at. The PCE, their model has been going down. It was in February, it was 2.7. We're at 2.3 now. So good moves there. We have the unemployment rate really not moving at all. This is the pendulum that people are focusing in on now. And then we have that GDP. Last reading was 2.7. It's now negative 0.3. And will this be adjusted? I think a lot of people made moves on pre-tariff deals, and a lot of things are skewed because of that. So that's my analogy there. This is what you're seeing across the board. Here's the culprit right now, folks. Okay, so here's the dilemma that we're seeing right through here. Here's why mortgage rates aren't going to hit 5% anytime soon. I want to explain to you what that rate is over there. That's the rate that the Federal Reserve controls. It's called the federal funds rate. That's the short-term rates that people talk about. When you have short-term yields and then long-term yields, where short-term should be low and long-term should be high. Let me pull up a yield chart. It might take me a second to find this, but let me pull up a yield curve, and I'm going to show you what I mean by this. Let's go into yield curve. Let's see if we can find the yield curve. I don't know if that's the one I want. There's one that I really like in here. Let's see if this is the one. I don't think this is the one. No, that's not the one. Let's check and see if there's one other down here, right through here. I think this is it. Okay, so what this is telling us right now, this is today's yield curve. All right, here's the problem we have. This right here. Okay, this right here, that's what's it telling us. It's about 4.25. Okay, the same as the federal funds rate right through, where did it go? Federal funds rate right here. Okay, let me find it, folks. I apologize. Federal funds rate right through here, 4.25, 4.5. So that's the front end of the curve right here. So then you have mortgage rates. Let me get out of this. So this should be basically all the way down here, or way down here. Let me go back to this and show you what's going on behind the scenes. If you go to 2020, this is kind of a normal yield curve. I don't know why my computer's lagging, but here's a normal yield curve. You see down here where it's kind of zero? That's where it should be down, 1-2% maybe. This is why mortgage rates are never going to get below, 5.5, because what will normally happen is you'll take what the yield is today on this, go back to the yield today, the 4.25, say, then you're going to add at least 1.75 to 2% to that. So that's going to give us 6.25, 6.3, 6.5, say on rates. It's kind of where we are right now. It is inflated because there's a risk premium there, but this is why mortgage rates aren't going to go much lower than, even if they go down to 6.25, they're not going to move much from there, because you can get safer money without any risk just by buying a bond, a Treasury bond, at a yield of 4.25, 4.5. So that's not exactly how it works, but that's kind of what the models are telling us behind the scenes. Short-term rates are way too low or way too high, and until those really adjust, then the mortgage market isn't going to adjust and the bond market's not going to adjust. So that's why you're not going to see rates, down to 4.5% and 5%, because we have the federal funds rate almost at that rate right now, and you can get, you can buy bonds at that yield without any risk. So that's the reason behind a lot of this. So when people are saying, it's going to go down to 4 or 5, it's not, until we have the Federal Reserve moving these numbers, and then you'll see the long end of the curve possibly, once the inflation numbers and everything else start coming down, start to retract and coming down into normal ranges. So when that happens, it could happen next quarter, next year, you could see mortgage rates basically taking, the federal funds rate should be about 3.5%. You add 1.75 to that, you're still looking in the high 5s, low 6s. So that's where my expectations are for rates basically at the end of the year. Short term, they're going to just bubble right around here. They're going to stay right around the 7% mark. So if you can qualify there until there's more certainty on tariffs, that's what you're going to see there. Midterm, as deals get worked out, you're going to see things that happen just like you see with the China trade, but not as big, because any other economy is not as big as China. So that's basically what we're seeing in today's headlines today. So my expectations are right through here. I don't think mortgage rates are going to really move all that much, especially today when we have a big report coming out tomorrow, when we have PPI, producer inflation, coming out tomorrow. So the news coming out tomorrow is retail sales. We're going to see if the consumer is still spending like crazy. Initial jobless claims. What's the job market really looking like? And then also what the producer inflation is going to look like, because now tariffs might be working their way in here. So is that number going to be a little bit higher than expected, or is it going to come in line? That's what we're going to focus in on, and that might be a market mover for tomorrow. So my expectations right now, the MBSs are down 10 ticks. What we're seeing right through here, mortgage rates aren't really going to do much of anything you're seeing through here. So it might tick up 1 or 2 ticks, or it might even tick down 1 or 2 ticks. So no major moves in mortgage rates today, folks. But join me today live. We're going to talk stocks, bonds, and real estate in my live event today, where I'm going to talk this stuff, as well as give you insight into some stocks that we're looking at, and also an insight into cryptocurrencies. Is there money to be made there? I'm not an economist. I'm not an economic advisor. I'm not even a financial planner. I'm going to give you what I'm doing in the background personally, just so you can use for entertainment and educational purposes. So thanks for watching, folks. My name is Dan Frio. I do this report actually 2 times a day to help inform you guys what the heck's going on with mortgage rates. If you'd like to use my services or check me out, just go to therateupdate.com. I work at a federal bank, and that makes me licensed throughout the entire country, which is kind of cool. So no matter where you are out there, I can help you. Here's the cool part. It's our slogan: one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, the bank I work with, we're set up with 34 other lenders. Now, you might ask why. What's to help you guys? So what are you looking for when you're trying to find that house of your dream? Well, you go out there and you start looking at mortgage products. It gets a little bit confusing. So you need to, 1, make sure you have the right mortgage product. Then 2, you're like, okay, I need to get 3 or 4 quotes to make sure I'm getting the best rate in town. How about using my services? I'm going to scan over 33 different banks and lenders to see whose rates are the best for you guys in today's market. So check it out. My website, it's therateupdate.com. You can put in your application right above my head. You can schedule a consultation call right here to just figure out what actually do you guys do, or just call us. Move to the front of the line. Just give us a call. Be more than happy to answer any questions that you have. We also have some videos down through here. We have 3,000 videos and more on our YouTube channel, but these are some that we handpicked. So if you're out there and you're a homeowner, check out our RateWatch tool right through here. Let me track interest rates for you. You keep missing that refinance opportunity. Well, let me track it for you. Trying to buy that first home? Check out Home Buying 101. If you're a disabled vet, please check out the services we offer through here. And then that credit service company that I use, this is the one I personally use. Check it out. It's pretty cool. Helps you monitor your credit scores and actually do a lot of things behind the scenes that most people don't really realize. So check out those tools and more. So that's it for today, folks. I will be live this afternoon. We're going to talk real estate, stocks, bonds, and cryptocurrency. So if you want to learn a little bit about those things, please join me at 3 o'clock Central Time to find out, what my thoughts are on the markets going forward. Thanks for watching, folks. God bless. Have a fantastic day. Can't wait to see you here at the live event at 3 p.m. Central. Take care. Bye-bye.